Hello, fellow traders. Tis I, TheRumpledOne, coming to you on Tuesday, August the 29th, the year's 2023. Let's talk trading. If you think you're right, you are wrong. Part 2. These videos are for educational purposes only. Your results may differ from mine. And as a reminder, since you're going to be wrong, let's just make sure when you're wrong, you don't lose any more than you're willing to on any one single trade. And to do that, make sure you have your stop loss in place and your position size the proper size. So we've had a couple of red news events here on the pound US dollar, and you can see if I crunch in the price action, you can see what happened in the latest news. We had some news, let's see, right about here, my time was the first news event, and that was pretty much a nothing burger, even though price did trade down, put in a new 3-ball. And then the news just came out a half hour ago, and price shot up like a rocket. Now, the question is, right and wrong. One of the things that we have observed on red news days, right before the news, if they take the price down, they shoot it up. And if they take the price up, they drop it like a rock. Does that always hold true? Of course not. And this is one of those things where if you're going to take that chance, you really have to trade light. Otherwise, you can get wiped out real quick. But even a light trade, I mean, if you were just trading, say, $1 a pip, you would have put about $50 in your pocket in the space of a couple of minutes. Make that about, let's see, 1, 2, 3, 4, 5, 6 minutes. Okay, 6 minutes, $50. But then if you were trading, one lot, that would have been 500. 10 lots, that would have been $5,000. So you have to trade smart. And we talked about smart versus stupid. And so when you're trading news, the market's always unpredictable. Everything is a guess. And that's when you have to make sure you are very smart when you take that risk. You have to be smart on the risk side, smart on the profit side, smart with the size. You just have to be smart. And as you can see here, it looks like we're now in a trading range. We put in a high, failed to make a new high, prices peeling back. You can see here we've had a 23% retrace from 3-ball to 3-ball on M1. Ditto on M5, on M15, M30, and even on H1. H4 also was very interesting here at the top of the hour. Once again, we pulled back on the first news. We didn't make a new low for the day. And then all of a sudden we turned right around and shot up like a rocket right across the H4 open out of the previous H4 lower wick zone. We're now in the upper H4 lower wick zone. I'm sorry. We're now inside the previous H4 upper wick zone. And you can look here at breaking M5 highs and then coming back down through them, breaking M5 lows. Just using the sweet spots indicator every 5 pips. Once again, sometimes the simplest things make money if you follow your own rules. We've talked about rules, so after this candle color at the line, it was red. In this case, here, candle color at the line wouldn't have paid off, but you already had the big run up, so then you start looking for reverses. So there's one candle color at the line worth 10 pips. Here's a second one. 1, 2, 3, 4, 5. Worth what? That's 20 pips of movement from here to here. Then candle color at the line. You either caught 5, or if you waited for here, 10. Candle color at the line, 5 pips up to a potential of 8. Candle color at the line, negative. That would have been worth a couple pips. Going the other way would have been worth a couple pips. And finally, candle color at the 25 psychological line. At the moment, 5, 10, 15 pips. And the thing is, this happens every day, especially and on these news events. Once again, sometimes it's smarter. Let things shake out the first 5 minutes and then start taking trades. Because here there's only two types of traders, the quick and the dead. I've mentioned that years ago. Now, back to the subject. If you think you're right, you're wrong. A lot of times traders will think that they're right about the market, they're right about trade direction, and the whole idea of the right and wrong is actually the wrong way to look at it. It's not that type of binary dichotomy, okay? What we actually have here, the better way to think about it and talk about it and explain it, is in profitable and unprofitable. So you can take a trade at the line with the candle color, and that particular trade turns out to be profitable. You could then turn around, get the exact same signal on the exact same pair on the exact same line later in the day, and that trade would turn out to be unprofitable. Say it crossed the line and then turned around and reversed on you, never to come back, at least not in the near future. In fact, it went on to hit your stop. So, was one trade right and one trade wrong? No. One trade was profitable and one trade was unprofitable. And so, that's what you have to think of when you're trading. Right here, we just had a new 5-minute candle a couple minutes ago as I was talking, but here at the line there's 5, 10, 15, 20 pips. And of course this big candle here, 54 pips, 99 percentile, then we would call that a return bar. And as you can see, price is returning to the open of that. We've still got about 10 pips or so to go. It may get there, it may not. But the main point I wanted to drive home today is that talking about right and wrong isn't really the best way to describe what you do in trading. Think in terms of profitable and unprofitable or not profitable, because that's what it boils down to. And there's many ways to be profitable. You know, the way I trade is not the only way. And one of the things here that I was trading for, but I jumped out right before the news because I didn't want to be in the wrong way, was to hit that H4 pivot. See, it opened, it went down first, then came roaring back and took out that pivot and then some. And you can see here, We didn't break the low. We only missed it by a couple of points. 1 point to match it and one more point to break it. And you can see here we were in both ATR zones. This was one of those coast to coast days. But it's interesting, we missed out on making a new high by just a couple of pips. Notice we had a holo trade right here that if you would have jumped in, it would have been a nice ride. But once again, if you were going to ride, be in a trade before the news, you got to be really careful. Make sure your stops are in place. You know, could have had pending orders at the wick zone. It's another way to trade news where you say, you know, if it hits these levels, it's going to break out. One other thing to note about today was, let's see if I have that on a chart. Well, there's the H4 pivot. Daily got taken out. Weekly still hasn't been taken out, missed by 10 pips, and not so much on the monthly either. I'm looking, oh yeah, right here. The weekly open. This is only Tuesday, but you can see here we haven't had a close on H1 below that weekly open. And that was pretty significant, taking that trade across the 70. Once again, simple horizontal line trade, trade with the candle color. And the thing is, you don't have to use the hour or the M5 or the M30. You can use whichever one you want. Now, of course, here, if you were using H1 and it crossed down, you would have taken the short, but it would have been red. You wouldn't have taken the long if you're using H1. So that's why sometimes I started to use M30 over H1 because you can see here you get these flip-flops of candles. And that's because when I was doing the cover work and I discovered that, whoops, I was doing the cover work and the statistics, and I found out that the M30 out of all the candles covered the most, meaning the high was above the previous candle top and the low was below the previous candle bottom. So the body, the range of the body of the previous candle got covered. M30 was the best one out of the bunch. So just to repeat myself one final time because it's really important. Rather than use the words right and wrong when you're talking about trading, what you did, what you didn't do, what the market did, what the market didn't do, what the method or system did or didn't do, don't describe it as right or wrong. Don't describe your actions as right or wrong. Describe them as profitable or unprofitable, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.